Time for another stock review, this time Heron Therapeutics, ticker symbol HRTX. Very popular request from our members, this type of stock. In this review, remember, it's completely impartial. I don't own the stock, I only own the S&P 500, but you're going to get the facts that I'm not sponsored by anyone to talk up or pump and dump the stock. I'm going to share with you the balance sheet, the profit, the loss, the solvency score, tell you whether the company is profitable, who's buying on the inside, what the margins look like, who's selling on the inside, what the website looks like, what the latest news around the stock is, how it compares to the S&P 500, important updates, earnings reports, the whole works is coming up in this review. Plus, meet the CEO. We can have the CEO of the company on the show. So we are talking therapeutics this morning. Heron Therapeutics. Is this a company that you can invest in and make money from? Well, we're going to find out now in this review whether it's going to make you money and give you the most informed decision so you can make a decision whether this is right or wrong for you. So without further ado, let's get into it and explain to you, as I said before, I do not own the stock. I'm here to just review the facts using the most advanced algorithmic software. You too can use the software for free. My members can get a premium plan, which makes my membership free as well with a discount that you get. And there you go. Now, please do smash the like button and click subscribe if you would like to follow this channel. If you would like to reply in your comments, I will reply back to all of my members. It's one of the members' perks. I actually do reply back to all of the members. Now then, we do have a Meet the CEO series. We've got a CEO I'm talking with today from a solar company. On Monday, I have another CEO on the show, and I've got many more lined up over the coming weeks. There's even talk of Elon Musk coming on the show down the line, Richard Branson, and many, many more. So would you like the CEO of Heron Therapeutics, who is Craig Collard, on the show? Well, you have the power to make that happen. What we do is I believe in underselling and over-delivering. I never message or network anyone. I just put my content out there. If you would like the CEO of this company or any company on the show, you take this video, you share it on social media, you put it in Reddit rooms, X, you email the investor relations and say Martyn Lucas has interviewed CEOs, and you have an open invitation anytime. Breaking news, you can call in. The phone line is always open, and you can be live on the show, live or recorded. And also underneath this video, if you click above my head and down below in the description, you'll also find an invitation to the CEO video. So it adds to what you're saying and you can send that off. And it works very, very well. We've got lots of CEOs now coming on the show. Great stuff. So what is Heron Therapeutics? What's going on? Can we make money from this company? Let's start off nice and simple first of all and look at the line chart. As you can see, a very volatile stock. Most therapeutic style stocks are, but we are now back on the floor again, down 73% maximum. What is it though? Heron Therapeutics, Inc. is a biotechnology company which engages in the development of pharmaceutical products for acute care and oncology patients. Its products portfolio include SUSTOL, CINVANTI, HTX-011 and HTX-034. The company was founded in 1983 and is headquartered in San Diego, California. The listed name is HRTX, Heron Therapeutics. There you go, 1983, California, 203 employees, and there is Craig A. Collard, who I've invited, or you will invite on the show, but the invitation is there. Now then, with therapeutics, biopharmaceutical stocks, they're always looking for the next breakthrough in science, so there's a lot of expense with research, a lot of expense with trials. Things can go wrong very quickly, all kinds of lawsuits and legal wranglings. However, if they get a breakthrough, suddenly the money rains. It can be like that, but it's very hard to pick the right stock. So if you're buying this stock on margin right now, maintenance is 100% regarded as very high risk. Low volume, 1.7 million. Today's volume so far is 11.81. Very low volume, so it's very hard to get out of the stock at the price you want. There's no dividend for this stock. 52-week low, 50 cents. It's definitely a penny stock. 52-week high, $2.99. Anything under $5 makes it a penny stock. Now we've got the earnings in a couple of days. If one of my members super chats me and says, hey, I would like you to cover the earnings, I'll cover it. Or if we get 100 likes, I'll cover it that way. Whatever comes first. All right, maybe I'll do that. Maybe that will happen. Now we can see the earnings is generally trending upwards. Will we be on earnings this time? Because we are getting closer and closer to becoming cash positive. That would be good for the company. Who else is buying the stock? Who else invests in this company? Investors of Nikola. Very high risk stock, up and down, but had a very checkered past, but now much more bullish I am on this stock. Plug Power, great company, but a lot of manipulation from Russian oligarchs. We've seen it live on the show. Tilray Brands, I've reviewed this stock. Very, very risky. Erwin Simons, not made the best decisions, I don't believe. Workhorse, I've not reviewed it. I've not reviewed this one or this one. But I can tell you these first 1, 2, 3, 4 are extremely volatile stocks. So the stock is going to be volatile, but it doesn't take a rocket scientist to see that. You can see that for yourself, right? So anyway, without further ado, let's go and look at the website and see if you can make money on this stock. So what do you think? Do you like this kind of business? Can you make money from it? Well, let's go and take some more detail now and look at the website. There is some latest news around the stock that you might find interesting. Let's go. Here we go. This is the website. Welcome, Heron Therapeutics, injectable emulsion. That's Aponvi. Welcome Aponvi. Now approved. That's latest news here. I'm going to cover some latest news in a moment. About Heron, let me just zoom in just a moment. Here we go. Let me give you this information. About Heron. At Heron, we are unwavering in our commitment to improve the lives of patients. We aim to advance the therapeutic standard of care for patients through a portfolio of best-in-class therapies that bring together our innovative science and technologies with well-known pharmacology to deliver medicines that matter. Solutions Spotlight. At Heron, we understand what it takes for patients, their caregivers and families, which is why we are laser focused on providing solutions that can address unmet medical needs so they can spend more time doing the things that matter with the people that matter. Okay, let's have a quick look at some of the latest news. We can't read the whole website, would be here all day. This is some information on Heron. Developing best-in-class medicines, improving lives. Let me just read the first paragraph of this. You can obviously pause it and zoom in if you want to get more. Okay, here we go. Our mission is to improve the lives of patients by developing novel, best-in-class treatments to address some of the most important unmet patient needs. We aim to provide patient-focused solutions by applying our innovative science and technologies with well-known pharmacology. Now, I do have, you can see some of the products there, SUSTOL, CINVANTI. I do have some latest news here just released just a month ago from Heron. So this would be interesting. Heron Therapeutics announced FDA approval of ZYNRELEF. Indication expansion to include additional orthopedic and soft tissue procedures. Heron Therapeutics, biotechnology company, today announced, this was January the 23rd, so just a month or so ago, announced that the US Food and Drug Administration has approved its supplemental new drug application for ZYNRELEF. Okay, so that's good news. Again, you can pause that if you want to read the whole of that. But I am now going to focus on the numbers. Can we make money from this stock? And I will, of course, update this. We've got the earnings in a couple of days' time. If anybody super chats me or it gets 100 liked on this video, I will, of course, then cover the earnings and do a follow-up review potentially as well. So can you make money from this stock? Well, let's go and look at the numbers. Does it all stack up? Does it make sense? Let's start by looking at the intrinsic value of the company. All right, so far, have you liked the video and have you subscribed and rung the bell? I hope you have. All right, don't forget, leave your comments below and I will reply to you. Members, I will reply to all of you. HRTX, intrinsic value. This is good news. It's 33% undervalued at the moment on the base case. There are no warnings. We can regard this as reliable. Looking at the numbers, we've plugged it through our system. We've got a undervalue of 33%. Good. Considering we've just had FDA approval for its latest drug, then that looks pretty good, right? 33%. Let's move on down. Let's do a back test in real time, run it through my software and see what it does with the correlation to the price and profit. 74% correlation. Again, you can pause this if you want further information on that. I'm not going to labor on that too much. Now, on the last earnings, of course, we'll learn more in a couple of days, but last earnings, Heron Therapeutics had significantly reduced operational costs from 182 million to 135 million in 2023 and anticipates a further decrease to 108 to 116 million in 2024. Gross margin is expected to improve from 41% to 62%. Very, very nice indeed. Let's see if these numbers come off in the earnings in a couple of days' time. Potentially reaching over 75% by 2025, owing to scaling, operational efficiencies, and reduced product write-offs. These measures support a pathway to positive EBITDA by Q4 2024. That's what we're looking for. We're excited. Oncology care remains stable with an increase in net sales to 26.7 million for the quarter. The acute care franchise grew 4.7 million in net sales with Zyme Relief. We just talked about that. Seeing a notable increase. A focused commercial strategy on orthopedic procedures amid a 16% growth over the recent 8 weeks indicates promising momentum for future success. All looking good here so far. We like it. Valuation looks good. Fundamental information from the last earnings looks good. Let's move on to the balance sheet. The revenue is up 4% on the most recent range and expected to increase. We've just spoken of that. Operating income is up 12%. Look at that, and expected to go further. Net income up 12%. This is looking very, very good so far, guys. We've got FDA approval. We've got a good guidance, a good intrinsic value, income, and everything moving in the right direction. Increase in profitability. It's a buy so far, isn't it? Financing cash flow negative 28%. Investing cash flow is up because it's less 80%. It makes sense. It's a green number. 28.9 million. We've got operating cash flow, which is up, 22%. Balance sheet now. The balance sheet is ultimately important. We want more assets than liabilities. We don't want too much debt. We want cash on the books. That's what we're looking for a perfect balance sheet. 229 million in assets, 257 in liabilities. Everything was perfect so far. Well, what have we got now, though? Is this all bad? Well, we've got more liabilities than assets at the moment, but that could be about to change if we take what the guidance says. 222 million, but 77 million is in cash. So out of the 229 million, we have a good number. We get a good number of cash. 77 million. Liabilities. Do we have any long-term debt? Half of that. Long-term debt, 58%. Everything was great until this point. Everything looked really, really good. But at this point, the gloss has come off a little bit. It's not perfect anymore. Up to this point, everything was perfect. But now it's a little bit less attractive because we have 50% of our liabilities are long-term debt. Of course, though, that can be a catalyst. If things improve, which we're expecting, we can pay off debt. And do remember, we do have 77 million in cash, and we currently have long-term debt of 149 million. So we can effectively wipe out half our debt if we wanted to. But with interest rates coming down, which they will, that's a positive catalyst. So it's not what we wanted to see, but it's not all doom and gloom at this point either. Some good figures here you might want if you pause the video. If you watch on a big screen, we are broadcasting in 4K, so you can see the detail. 45% gross margin, and that's expected to increase. We just spoke about that. Free cash flow analysis, you can see there. Again, if you want to pause that, you can get further information there. Right, profitability, 49%. Not too bad, actually. It's not red. It's just about to turn green. And we have all four metrics ticked. Exceptional revenue growth, gross profit, positive gross profit, exceptional ROE. ROE is increasing. All of that is good. Long-term solvency is not so good, though, hence the 38%. That's what I'm saying. That debt just spoiled the party a little bit. Positive net debt, also negative, but short-term solvency is fine and low DE. So the business is not going bust anytime soon. It's fine. It's got a good runway. It's got some cash. It could clear half its debts. Up to this point, everything was great. Now, if we can get everything else to be great, either loads of short interest with huge volume, potentially short squeeze, or very little short interest because we've got low volume. We want one of those two things, really. We also want to see insiders not selling. We want to see insiders buying, and we want to see some good Wall Street targets. And then maybe we can turn this round to a buy again. Let's carry on going down. Let's have a little look. Well, now things get better again. Wall Street are giving a worst case scenario of a 63% upside. I think things are going to improve over the next 12 months. On the earnings, we're going to learn a lot more. We might want to cover it. 174% on the average and 281% on the highest. That's looking great. So now we're back to a potential buy now. Now let's go down to the competition. If you want to look at the competition, I'll give you a link above my head down below in the description, and you can go and check the competition out on the software that I use. Right, now we're getting even better again. We've got, during the last 12 months, Heron insiders have bought $287,000 worth of shares, not sold anything, not sold. So we like this, buying in. Good. We want to buy in before they start buying in too much, though. It's not a huge amount they bought in, but they bought in the last 3 to 6 months. Obviously, they knew this good news was coming. That's good. So maybe we're back on a buy again now. We're back on a buy. Let's move on down. What about short interest? There we go. So because of all of this and the debt situation and the stock being so low down, 18.89%. So what I said to you was, we either want no short interest, so it's not being driven down by shorters, or we want above 20% with volume. Now we're 18.89. We're approaching excessive. If we get 20% short interest and then move forward with volume, and volume could come after the earnings, of course. If they present good earnings, which they suggested they would in the last earnings, the guidance looked good with the new FDA approval of Zyme relief and other things we've already talked about. This potentially could be a short squeeze, but we don't have the volume, but we could get the volume on earnings with good news, and especially if there's as we move down in the review, if there's very little coverage of this stock. My stock, I will rank number one for this, as I rank number one for most stocks I cover now. If this is a bullish review, and again, I'm not influencing it. I don't own it, right? I don't benefit from this video doing well. It doesn't bother me. The stock doing well. Other than I want it to do well because it employs people and you make money. That's my only concern. So there's a potential there. Let's see if there's very little coverage in the news on this, and then with my coverage, it could do better, right? And there it is. There is no coverage. There's very little interest. Not many people are talking about it. It's under the radar. That CNBC was 2 years ago. Nothing at all. So mine will rank up here. And there you go. Nothing at all. So let's go and look now at how it compares to the S&P, and then I'll give you my final thoughts on it. But this is, as you can already guess now, it's a potential buy. That didn't take a rocket scientist to work that out. Okay, click the like button and share this video out. Let's have a look now. If we put $10,000 in 2011 in blue in Heron, we're now down to nearly $3,000. We've lost 70% of our money thereabouts. In red is the S&P. Your 10,000 is now 5x to 51. Remember, every 7 years, traditionally the S&P doubles. And that's just how it works. So, you know, S&P is a good standard to measure it by. So there you go. You can see the volatility we've had. You might want to check what happened here. What happened here? Look, you can see that from their past news and see what happened there, and do the same thing. See what happened here and see if those catalysts can occur again. So let me wrap up on this review. Let's look at it. What have we got? Let's look at the clues, whether we should buy this stock or not. I sounded a bit like through the keyhole then. Let's look at the clues and see what we have. We have a very good valuation. It looks like it's undervalued by 33%. We have a good guidance. The last earnings was moving very, very much in the right direction. We have FDA approval on a new drug. We have margins improving. We do have a little bit of an unpleasant balance sheet, but we do have cash to pay off half the debt. Interest rates coming down, so that would be good. We've got very little interest in the stock, which is potentially good, because once this video trends, which it will, and if we get the CEO on the stock, and that's down, the CEO onto the show, and that's down to you. You can do that by sharing them the video and all the rest of it. You can get them on the show. So that's great. This could do well. The profitability score is 49. The solvency score is great. They're not going bust. They've got a very high Wall Street target, up to 281% within 12 months. Very, very good. Insiders are buying, and we've got a high short interest. So we have good volume on the next earnings, which is in a couple of days, which will be just after this video airs. Then there's a potential buy here. So for me, it's a potential buy. And if we get 100 likes on the video and we get a super chat, I'll cover the earnings. Click above my head for all the links down below in the description for my alpha spread, which is what I use to review the stocks. My members can get a free plan or a discounted plan for the premium, which basically makes my membership free. Also below in the description, you'll find the invite the CEO to the show. You want to check that out. And over here, the whole series of videos, I've done over 100 reviews here for stocks, and many of them are ranking #1 on YouTube. Until next time, as always, take care of yourselves and each other.